Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon, and thank you for coming on today.
Good afternoon, Devin.
Well, the U.S. markets were closed on Monday for a federal holiday, but on Tuesday closed much higher in a bounce back from their worst week in over 2 years. The gains relatively even across the main indices at over 2%. What's the story in the global markets?
U.S. Stocks rallied Tuesday through their worst week since March 2020. This rally gave some breathing spaces for U.S. investors after a quick money losing recently. The S&P 500 gained 2.4%, the Dow Jones added 2.1%, and the Nasdaq also jumped 2.5% on Tuesday. Investors' appetite for riskier assets on Tuesday follows a tumultuous week in the markets, sparked by the Federal Reserve approval of 0.75% interest rate increase, the largest since 1994. Investors scrambled to unload riskier assets amid growing fears that central bankers will plunge the U.S. economy into a recession. Meanwhile, investors await further commentary from Federal Reserve Chairman Jerome Powell when he testifies before Congress on both Wednesday and Thursday. All major markets in Asia fell today. As of 4 p.m. in Seoul time, Nikkei dropped 4.4%. Shanghai index also retreated 1%. Hong Kong's Hang Seng further dropped by 2% today.
Right. Despite that gain on Wall Street, Asian stocks down, including Korea's, substantially today, now below 2,400 points. Big declines for Samsung SDI, SK Hynix, you name it. The exchange rate creeping back up to almost 1,300 now. Tell us about the domestic market, Professor.
Domestic markets have retreated today, as you said, despite Wall Street gains yesterday. Domestic investors and analysts say they expect more pain ahead in the markets as Bank of Korea is expected to raise the key interest rate faster and higher. From the beginning of last week, according to my calculation, the Kospi dropped 6% as of today. Today, benchmark Kospi dropped 2.7%, and also Kosdaq lost 4%. In Kospi market, foreign and domestic institutional investors net sold 400 billion won, and it moved down market today. Most of large cap stocks dropped today. Samsung Electronics dropped 1.5%, and the second largest cap, LG Energy Solution, also dropped 2.9% today. But the Celltrion, a biotech firm, gained 1.3% today.
Well, now to talk about inflation, the Bank of Korea is saying that prices are being pushed up both by supply and demand. It's calling for inflation in the short term of above 5%, and it raised the inflation forecast for last month. What's going on with inflation, Professor?
Bank of Korea said Tuesday it expects inflation to grow at a faster pace than previously anticipated, and possibly hit the highest level in 14 years for this year, as price pressures are mounting from rising demand and a tight supply. Last month, actually, Bank of Korea raised its inflation forecast for this year from previous 3.1% to 4.5%. As inflation pressure intensifies quickly, however, Bank of Korea further raised its inflation forecast this year from previous 4.5% to 4.7%. This kind of frequent inflation forecast adjustment is really rare for Bank of Korea. So that represents how much Bank of Korea is embarrassed with current inflation situation. In an apparent forward guidance, Bank of Korea chairman says the central bank will carry out its monetary policy with a priority on price stability until inflation ends its upward trend. That hints that it will likely to continue to raise its key policy rate in the months to come.
Well, finally, Professor, despite record-breaking exports of semiconductors, cars, and so on, Korea is posting a trade deficit so far this year and could end up with a deficit for the year as a whole. The price of oil, of course, a main factor here because of the war in Ukraine, and that could get worse. What should we be watching in terms of the trade balance, and what can Korea do about it?
In May, last month, Korea posted a trade deficit for the second consecutive month in the wake of spiraling import prices of raw material, despite its brisk export performance. Korean exports increased by 21.5% on year to record $61.5 billion in May. Nonetheless, the trade balance was in red in May as imports volume reached $63.2 billion US, up 32% also on year. But the ongoing Ukraine-Russia war has brought about a spike in import prices of crude oil and other energy-related products, with the imports volume of crude surging by 35% on year. But on the other side, it is estimated that Korean economy's trade deficit declines as China's lockdown of Shanghai disappears soon. Actually, major countries, including Japan, France, Italy, and the U.S., are suffering a trade deficit amid rising energy prices.
Got it. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on. We really appreciate your insights, as always.
Thank you very much, Stephen.